Good morning, I'm Peter Milios from the Finance News Network. The S&P 500 closed Friday slightly higher, but all three major indices ended a 9-week winning streak due to a better-than-expected jobs report. The broader S&P 500 index increased by 0.18%, the Nasdaq Composite edged up 0.09%, and the Dow Jones Industrial Average inched higher by 0.07%. This marked the first negative week in 10 for all three major indices. The Nasdaq experienced the most significant drop at 3.25%, its worst weekly performance since September. The S&P 500 and the Dow declined by 1.52% and 0.59% respectively. On Friday, stock prices fluctuated as traders evaluated economic data to gauge when the Federal Reserve might begin cutting interest rates. The US economy added more jobs than expected in December, with non-farm payrolls growing by 216,000, surpassing the Dow Jones consensus estimate of 170,000. The unemployment rate remained steady at 3.7%, indicating continued labour market strength. This report caused Treasury yields to rise, with the benchmark 10-year rate peaking at 4.103%. A robust job market might delay the Fed's anticipated rate cuts, which traders had expected as early as March, with as many as 6 rate cuts in 2024. These expectations may need to be revised. While the December ISM services indexes suggested overall economic expansion, it fell to 50.6%, almost 2 percentage points below the Dow Jones consensus estimate of 52.5% and November's 52.7%. A rating above 50% indicates economic growth. The stock market rallied at the end of 2023 as traders anticipated a shift to easier monetary policy by the Fed. The S&P 500's lengthy winning streak marked its longest in nearly 2 decades, resulting in a 24% gain for the year. In the new year, the market faces headwinds, including the cooling of large-cap tech stocks like Apple, which received downgrades from 2 research firms this week, leading to a 5.9% decline. Overall, most sectors closed higher on Friday. Financials was the best performer, whilst consumer staples was the worst. This week, the focus is on the US December CPI data and the beginning of Q4 earnings season for US companies. Analysts anticipate strong performance among S&P 500 companies, driven by factors such as a robust economic growth, lower interest rates, and a weaker US dollar. Federal Reserve officials are expected to remain cautious about rate cuts. In commodity-related news, oil prices saw an increase over the week due to concerns about a potential escalation in the Israel-Hamas conflict. West Texas Intermediate settled at $73.81 per barrel, marking a 3% increase, while Brent settled at $78.76 per barrel, showing a 2.23% increase. The Chilean government has launched a public-private partnership aimed at extending the lifespan of the Atacama salt flats, which are known as the world's most affordable source of lithium, by an additional 30 years. This partnership involves a 50-50 joint venture between the local mining company SQM and the state copper company Codelco. The goal is to ensure continuous production of a significant portion of the global lithium supply, crucial for electric vehicle batteries, until 2060. This extends the previous expiration date of 2030. Lithium prices are expected to continue declining due to increased supplies, subdued demand in China, and a sluggish American electric vehicle market. Australia's Department of Industry, Science and Resources predicts that the spot prices of spodumene will drop to $2,200 per tonne by 2025, from an estimated average of $3,840 per tonne in 2023. Additionally, the spot prices of lithium hydroxide may decline to approximately $30,000 per tonne in 2025, from an estimated average of $52,450 per tonne in 2023. These price trends could potentially impact investments in battery metal mining projects that are crucial for the transition to cleaner energy. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.04% fall. Thank you for listening.